What is going on, you guys, and welcome back to another video here on the channel. My name is Brandon, and today we'll be highlighting 3 stocks to buy going into the month of November. As always, keep in mind this is not financial advice to you. This is not direct advice saying to go out and buy these stocks, but simply some suggestions, simply some ideas into some stocks that I believe may be offering a nice buying point at the current time. And also, if you're enjoying the content here on the channel, feel free to drop a quick thumbs up on the video. It really helps out. But let's get started diving right on into the first stock for today's video. It's a company titled UnitedHealth Group. The ticker here is UNH. And what these guys do is they provide private healthcare insurance. So they provide healthcare insurance to individuals, families, employees, you name it. They also have a section of their business which they brand under Optum. And this is what they like to call their technology-based or technology-focused services. It's a little bit wish-washy there, the technology-based services, but all in all, essentially what you need to know is that this is America's largest provider of private healthcare insurance. Now, why do I think that this is a good stock to buy in November? And I'll actually start by addressing here a concern regarding UnitedHealth, and that is that coming up to this upcoming election, one of the major concerns is that government-sponsored plans, so not private here, government-sponsored plans are going to become so popular that they're essentially going to wipe out this part of the market. There's going to be no need for private healthcare insurance. We, of course, have ongoing talk of healthcare reform. Just in the pharmaceutical space, there's the drug transparency that everybody's pushing for, Medicare for all. There is no doubt a lot of scrutiny that's currently surrounding the healthcare space. And by taking a look here at the performance of UnitedHealth, this is highlighting a 5-year number. We do kind of see that. We've seen that reflected in the price with a little bit of weakness. The stock was actually down about 20%. This is prior to Tuesday. They had a bit of a pop on Tuesday when they reported earnings. If we take a look here at revenue growth, this is a year-over-year number. I mean, it's still positive, but over the past few quarters, we have seen a bit of a decline. Now, like I said, they did report their earnings this week on Tuesday, and it was a very positive report. The stock was up about 8% on Tuesday alone, the day they reported. And to just take a look at some of the key highlights, some key takeaways from this report, UnitedHealth Group's third quarter revenues grew by $3.8 billion, or in other words, revenues up 6.7% year over year. Third quarter earnings from operations, their earnings grew by $424 million year over year. It's up 9.2%. And if we do take a little bit of a scroll down here, we see United Healthcare grew to serve 415,000 more people with benefits. This is over the past year. So they added 415,000 new customers, new clients over the past year. So all in all, a very positive report. And my takeaway from a report like this is that we're always going to have talk of drug reform and these political parties just pushing their different views, their different stance. And with the election right around the corner, they're going to be hammering in all of these different views. It's expected, and we almost have to anticipate that we're going to see some weakness in the pharmaceutical sector, in particular, a company that delivers private healthcare. That makes total sense. But when you see numbers, like you take a look at 415,000 new customers added over the previous year, I believe there will always be a need for private healthcare insurance. I know it may not feel that way when we have all this talk, especially in our current day where we stand right now, but this will always be an active part of the market. There will always be a need for this. And the likelihood of that just getting completely wiped out, in my opinion, and based on the research that I've done, pretty low chance of it getting completely wiped out. And if that's something that you believe in, if you can see that view and you take a look at the numbers here in the recent report, well, then this weakness that we're seeing with people selling off and saying, I don't want to be in these healthcare pharmaceutical stocks, to me, that could be representing a buying opportunity. And if we take a look at what Morningstar has them rated as, they have them rated as a 4-star buy with a price target of $310, still trading at a bit of a discount there. Not to mention that the stock does pay a really nice dividend. It's not a crazy high one at the moment, but reading here, UnitedHealth began paying annual dividends in 1990. They moved to a quarterly dividend in June 2010. So it's definitely one to look into, with the stock being still down about 15% off its highs, but the stock currently trades for $236 USD. The yield is currently sitting at 1.82%, and UnitedHealth Group is the first stock to buy in November. Moving along into the second stock for today's video, and it is another insurance company. It's the company Manulife Financial. And this one is a Canadian stock. It trades here on the Canadian exchange as well as over in the US. But I say insurance here. We are switching over to the financial insurance side of things. This company provides insurance, wealth management, and you are likely familiar, if you're from Canada, you're familiar with Manulife Financial. But over in the States, they do operate under the John Hancock brand. And as well, actually a very promising space for Manulife over the past while. And where I see going forward is actually their business in Asia. So they do have some operations in China, Hong Kong, and Japan, as well as some other smaller countries. And I know this isn't really the prettiest picture here, but Manulife is the largest of the three insurance providers here in Canada. That being between Manulife, Sun Life, and Great-West Life, they own about a 33% market share. And why I think this is a good stock to buy, first of all, the dividend. Manulife is a very reliable dividend payer. The yield is currently up at 4.11%, and a very sustainable one at that. They have a 36% payout ratio. As well, I do have a lot of faith in the management, in particular here with the CEO of the company, just taking it in the modern day in the right direction. A guy named Roy Gori. He actually just came into this position in 2017, but I really like the decision to emphasize growth over in Asia. I think that's going to be key going forward, as well as becoming more of just a modern day and relatable company. And I know this is a stock that got absolutely hammered in 08 and 09. If you were investing through the financial crisis, you can leave a comment down below. This is very typical how a lot of financial institutions, a lot of finance companies performed. And I actually did get a comment. Somebody reached out to me by DM actually and asked, well, with this upcoming recession, what are your thoughts on these financial institutions? Do you still want to be holding a company like Manulife? And my answer to that is that nowadays, when you look at just how stingy and how precautious these banks and insurance companies are being, you take things like the stress tests that they're all doing. Here with Manulife, they put a very high emphasis on their LICAT ratio. In other words, just ensuring they have enough capital to basically cover their butts if things go wrong, as well as their leverage position. Another thing that they're focusing on here, just making sure that they, of course, don't get overextended like they did a decade ago. And despite the tendency as investors and as humans to kind of look at the last recession and project that out and say, hey, that's what's going to happen again in our next recession, that's probably not the case. At least that would be my bet. And whether this is fair to say or not, you could almost look at a company like Manulife and say that they're quite reliable. When you think of how these companies make how they pull in their revenue, they pull that in from premiums, from fees, and whether it's rainy outside, whether it's wintertime, summertime, recession or not, if you have premiums to pay on one of your insurance policies, or you have your assets being managed here by Manulife, or you deal with Manulife Bank, well, that's a pretty reliable stream of revenue for them. They can pull those in year round. So the stock currently trades for $24 Canadian. It does also trade on the New York Stock Exchange for any of our American viewers. Like I said, it has the nice dividend yield up at 4.12%, and Manulife is the second stock to buy in November. Moving on into the third and final stock for today's video, and this one was actually brought to my attention by one of our students over in our investing academy, a female student, because this is the cosmetic company Ulta Beauty. The ticker here is ULTA. And I've personally never been into a Ulta location. It's not really my thing. However, they did announce that they will be expanding to Canada soon, but this is a massive makeup and beauty retailer over in the States. They have over 1,200 locations across all 50 states. They carry over 25,000 products, and along with the products, they also offer in-store services like getting your hair done, makeup or eyebrows. You can do that in the store. And for any females that are watching the video, drop a comment down below. Leave your thoughts on what your overall opinions are on the company as a consumer. But in terms of their business model, in terms of the combination of selling the products as a retailer, but as well these in-store services they offer, which, by the way, are very high margin when they go out and do your hair or do your nails in store, it has proven so far to be quite a successful model. And unfortunately, these numbers as of 2018, but you'll kind of get the idea here. Across all three key metrics, we're seeing very strong growth in sales, very strong income growth, and even as well as store count, all on a nice uptrend. Now, Ulta stock did take a bit of a beating a few weeks back now when it dropped about 20% when they reported their second quarter results. So a pretty steep drop there in a single day. And this came off the back mainly on some weaker guidance going forward, projecting out some slower numbers. That said, if you are looking for a good growth stock and you got a bit of a higher risk tolerance than the other two companies that we talked about in this 3 stocks to buy video, there are a couple key reasons why I really do like a company like Ulta Beauty. I think that this is a good stock to buy. For reason number one, I really do like the industry that it's in. And we've talked about this before with a company here on the channel. We've talked about Estee Lauder, which is in the same industry. It's been a great stock to hold, which we've seen reflected in the share price. You know, girls, and actually in 2019, I should say here, and boys too, some of them, there is a constant need for makeup. And I think that it's fair to say that as much as a lot of the stuff is discretionary, like going out and getting the newest, lip kit or the newest blush things, it is in a way a staple where female consumers every day, when they run out of their everyday makeup, well, they have to go get it refilled. The same way you'd go get, toilet paper or groceries. It is really just an ongoing cycle. It's an ongoing need, and I would very much consider it a staple, which is obviously a benefit there when you're a company that's selling constant need. Now, secondly, I think that Ulta has done a really, really good job of marketing, and just marketing here to the masses and being this big shop where people can come, they can take the affordable route, and they can browse a wide variety of products, as well as get your hair done, get your nails done. It's kind of like an all-in experience. And they've done so with these big-time influencers. You take Kylie Jenner being one of the more recent ones being talked about with her new lineup of makeup, which to the best of my knowledge is exclusively available at Ulta locations. This stuff, this style of marketing, it really does appeal to this particular audience and to that particular market. They really have got that nailed down. And despite the talks of, hey, online shopping is going to come in here and Amazon's going to wipe them out, I think that the brand that they've built here and the loyalty that they have with their audience, they have a very strong loyalty membership program running as well. That type of thing can keep the company sustainable. And we've seen that kind of in the numbers here, despite the lowering of the guidance going forward. And if you hover out to the long-term quote here, you see after the 30% drop, this to me, it just looks like an awesome time to buy the dip. It's pretty clear we've dropped right down to these support levels. And if it's a company that you stand behind, if it's a company that you support, you buy the dip and let it rip. But the stock currently trades for $244 USD. It does not pay a dividend, unlike Estee Lauder, but Ulta Beauty is the third and final stock to buy in November. So guys, those are my 3 stocks for the month for today's video. Let me know what you think down below on my picks. Do you like them? Do you not like them? Give me a reason why. If you enjoyed today's video, feel free to give it a thumbs up and subscribe for more content. We post a video like this every week We do this video every month, but we post a video on the channel every week. And if you are a beginner to the stock market, if you're new, if you haven't got anything set up and you're looking to learn and get started, be sure to check out our Investing Academy. It's where beginners can come and learn. It's that first link down in the description below. We are currently taking on some new students at the moment, so be sure to go check out that training video. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.